All right, for those of you who have joined on the line, thanks for joining us today. And some of you might be watching this a couple of days later because we've recorded it and it's available on the fintechs website. We're here today to talk a little bit about the new Consumer Data Rights Framework, which is an exciting new initiative by the government, nevertheless, about basically using data to drive better customer outcomes. We'll cover a couple of different angles today, and the process of accreditation, which is obviously very important for many fintechs, the different user cases, and then we will have a little bit of a dive into as well what's beyond open banking, because the government has been signaling quite hard that, you know, banking is the first sector and that they're going to dwell into energy and telcos next with a similar approach. So my name is Jessika. I work for Amazon Web Services as part of their public policy team. I was asked to moderate here today a range of very talented people who've been very engaged in the open banking process for a longer period of time, or from slightly different angles. So I'm just going to give you a quick overview of the panelists and then throw over to them because they're the real hero of the dish here today. So we've got Paul Chapman, the Chief Executive and founder of Adatree. We've got Garrett from Frollo, Brian from 86400 or 86400, I think it might be, but you can tell us, Brian, a little bit more. Stephen Kemp from Intuit, and Jill Berry from Adatree. As I said, they bring their own very unique insights to this, and they have, I guess, different parts of the overall ecosystem that they're going to dwell into. So we only have an hour. We've got a lot of questions to get through, so we're going to kind of jump straight into it. If you do have questions throughout the session, feel free to pop them into the chat room and I'll try to get to them if and when we can. And without further ado, I want to start with asking the first question, which is for the panelists to kind of introduce themselves and outline in a couple of minutes the role that your company plays in the open banking ecosystem. And I'm going to turn to Jill in the first instance from Adatree to tell us a little bit more about how she fits in.
Cool. Thanks, Jessika. So Jill Berry, CEO of Adatree. Adatree is a RegTech. So right now we are not a data holder. We are not a data recipient. We are an enabler in the CDR ecosystem. So it's pretty complicated of what you need technically to be a data holder, a data recipient. And we have an open banking platform. So everything that you need technically to be part of the ecosystem, we have turnkey solutions for that. So you can do it faster, cheaper, and just overall way more simpler. So we're an enabler.
Great, thanks for that, Jill. And I might just turn to Garrett from Frollo to give us an overview of how you guys fit into this as well.
Thanks, Jessika. It's not Gareth, it's Tony.
Oh, sorry, Tony.
But
my apologies.
Okay.
Close, yet so far away. So.
Gareth's off skiing somewhere, so I'm doing the work, unfortunately. Frollo, it's just say who we are. We're a purpose-driven fintech, and we do both B2B and B2C solutions. So we help people feel better about money by being able to manage their finances. So it's that kind of tool. But as I said, we both supply B2B and B2C solutions. In B2C, we have over 100,000 customers and they're using our tools today. We are live on open banking, so that's progressing. On the data holder side, we help them both comply in the sense of what they require for their product reference data solutions. We help them compete and we help them innovate as well. So we are able to access all open banking data today. We also do it via screen scraping and direct connect to banks. So we're able to see the data, we're able to categorize it, enrich it, and then supply the features of our application, both in the B2C sense, as I said, or to B2B partners who want to create apps for themselves and be able to retrieve CDR data as a data recipient. That's us.
Perfect. Thanks for that. And thanks for that, Tony. And sorry for getting you guys mixed up. It's the useful phase, you know how it goes.
Thank you.
We actually don't have Paul on the line quite yet from Adatree, so I might just jump over to Brian to give us a bit of an overview from your end of things.
Hi, I'm Brian Parker. I'm the CIO here at 86400. That's how we say it. It represents the number of seconds in the day, and we're looking after you every second of every day. That's where it comes from. We're what we like to call ourselves Australia's first smart bank, and we've been live in the market now for 1 year and about 2 days, actually. So we're a full-fledged ADI. And we have been participating in the test process for CDRs since September last year, when they looked for candidates to support the launch, which was at that stage scheduled to occur in February. And as you're all aware, there's been significant delays to the project because there's lots of the components that weren't quite ready, and it was a little bit like herding cats to try and get everybody on the same page. But I'm pleased to see that it actually launched in July. But we actually looked at the opportunity a little bit differently. We currently, under our Smart Bank, allow our customers to connect their external accounts using screen scraping technology, the same as what Tony uses. And that enables them to look at all of their finances in one place, and we provide some smarts on top of that so that we can predict their upcoming bills and highlight any deficiencies in the way that they're using the money. And this is really what open banking is trying to achieve. However, we pressed what I call the pause button in May in our involvement in CDR, because we realised that the initial set of products being released by the Big Four banks weren't really going to enhance our customers' experience. In fact, in many cases, it could have degraded it. So we've just elected to hold off a little bit before we rejoin the program and commit our valuable resources. And I'm sure if anybody in the fintech world knows that every resource is valuable. And so we've been applying those to what we consider more valued uses at this point in time. So that's 86400.
Thanks, Brian. And we'll come back to that, because one of the questions I had was around some of the challenges of the last kind of 12 to 18 months, because I think it's fair to say that there's been a few. But before we kind of jump onto that, I'm keen on hearing a little bit from Steve from Intuit as well.
Yeah, thanks, Jessica. Yeah, so Steve Kemp, I lead our strategic and financial institution partnerships for Intuit in Australia and APAC. Intuit is the owner of QuickBooks accounting software. For those who know, Intuit's the largest sort of accounting software participant globally, with about 5 million small business customers, and an owner of various software products in the US. So we've been in Australia 7 years. And we were also, like Brian said, and Tony with Frollo, we joined the program in September as one of the earlier data recipients. So we've been involved since that time. I think the value for us, obviously, we serve small business and the accounting industry with a cloud-based accounting product. So for us, a bit like what both Brian and Tony said, we rely on screen scraping direct feeds now for all the bank data that we currently get. So CDR has a large appeal around moving towards API technology. There's a lot of advantages. And also, obviously, over time, we're hoping to extract other advantages regarding insights and providing more value to our customers and our advisors over time. So, yeah, that's our role to date.
And Steve, just on that screen scraping, you probably have the same as us. We have a success rate of around 50%, I think. I think about, maybe 50 to 60% actually drop off when you ask them for their credentials. So open banking, which doesn't need to do that, will be great. We should be able to onboard more customers.
Yeah, totally agree. And we probably get a little bit more success rate, but you're right, there's still a fair bit of drop off based on the process that even direct feeds puts customers through. So CDR will be a much easier process for everyone.
I think that's a really good segue into, I guess, the process of actually being part of the overall framework. So as you just mentioned, Steve, you've been part of it since last year in terms of engaging with the process. Brian mentioned that they had been engaged and then dropped out. So I think we're seeing a little bit of, I guess, just the nature of those type of schemes, right? At different times are right for different people. But I might just kind of jump around a little bit and just ask kind of what's been the most, I guess, surprising things about the accreditation process for you guys over the last 12 months as this kind of has been maturing. Some of you have been part of the overall trial. And I might start with you, Tony, just on that one, if that's okay.
No, that's fine. So look, we started September, October, the first working group meeting with the ACCC down in Melbourne. So it was some time ago. Obviously, we expected to get, be live in February, but as Brian said, really it's been underestimated every step along the way. In truth, by the government, by everybody involved. That's what happens with big IT programs. And if you look at open banking or CDR, consumer data right, which it's properly known as, it's as big as mobile number portability or local number portability. It's huge. It's not quite the size of NBN, but it's a significant undertaking. So people were fairly aggressive, thinking that it would be done by February. So we started back then. Of course, what our experience, I'm just not trying to speak for Brian and Steve per se, but our experience was actually one of testing the banks and actually testing the registry. It's not the experience, so I can just start off and say, it's not the experience that everyone else will undergo, because they're not expected to be testing the banks or testing the registry or the whole ecosystem. They're expected to be testing their systems and be able to comply, let's say, with the rules. Whereas we're in a different camp. We were actually participating in building the ecosystem. So there was something new for us. So we're the first fintech to be accredited. That took us through what's called an ASAE 3150 process. The ASAE 3150 process, the first time that the ACCC themselves would have looked at one, first, particularly for CDR, because no one would have ever submitted one. So, we found it difficult to get, experience or get people to, discuss it with us because there's no one around. And so in that process of accreditation, which has the two parts, one is around, the governance, your controls, how you secure the data that you're receiving. But the other part that was ongoing was the testing, and that's still, people can't just submit a document and say, we comply. They still actually have to comply with the testing and make sure that their systems work. So there is the two parts. So the 3150, it's more than just, security controls or control objectives, or, there's the 13 data safeguards. It's more than that. It's also around the governance. It's your whole organization, how you govern, yourselves to be able to make sure that people are doing the right things, make sure people, have the access rights to access the things they need to, make sure that data can't leave your laptop, for instance. Your governance processes in terms of what policies do you have in place. So we were finding we needed to build quite a lot of policies. Even though we were 27001 certified, we still required lots of policies. And even though we'd been working with banks and, trying to comply with CPS 234, there were a few surprises, like the rules actually have some minimum safeguards and they're not even part of CPS 234. So it makes it rather tough when you're coming across all of these things the first time. So picking partners, even picking an auditor was a job to do. Which auditor had done this before? None. It was. It did take a long time. I think we got our accreditation on the 7th of May, and of course we're live now. Still doing a lot of the heavy lifting, to be truthful, in terms of making sure that our use case, which is our app, which is quite a significant use case in as much as it draws upon all of the CDR data. So it's not a limited use case. We get a hold of all of the data, the bulk balances, be they accounts, be they transactions. We get all of it. And we're still finding things that, we're raising issues and things and working through them with all the different banks to get this back into a growth phase or rolled out. Anyway, I'll stop there, otherwise I'll keep going.
No, that's okay. And I think you've touched on something there. You know, I think a lot of I'll be interested in views from others on this as well, because I think it feels like, especially the ACCC, but even Data 61 is doing a lot of things for the first time, and maybe they might be over engineering certain processes as well. But I might just turn to Jill quickly, just get a line of sight from you about how you found the last kind of 12 months, and if there's been any surprises, pleasant or unpleasant, in the overall scheme of things.
Yeah, so we're like basically the key technical open banking partner for one of the first data recipients as well. So I guess surprises, it's not a surprise that there's delays, but surprise at like how often there's changes. So I guess it's almost a public service. The amount of testing and flexibility of testing with the ACCC and all the other banks, it's definitely for the good of the ecosystem. And for other data recipients in the future, you don't have to go through that. So that's great news. I think that something that we found was actually surprising, as Tony was really touching on, is that other certifications like your ISO, it doesn't really help you with accreditation. You don't get any any extra points for having that. And as much as we'd like to think that you can get accredited really quickly, technically, but there's three main parts of getting ready. It's technical readiness, business readiness, which is a whole lot of governance, internal processes, SLAs. That's not a turnkey solution that you can just plug and play. That's a fair amount of work internally, and then customer readiness as well. So that's testing, notifications, and education. So I think that's, luckily it'll be easier going forward for everyone once customers get used to it, once auditors, once the regulators and all the bugs are worked out. But it took longer than expected.
Yeah, no, I can appreciate that. Before we turn to you, Brian, because you've had as you said, you'd had a bit of a dropout or a pause experience here. I'm keen on hearing from Steve around that same thing, around whether there's been any surprises, and also maybe if you've seen the process mature over time, or are we still in that kind of early stages of having a lot of teething issues, do you think?
Yeah, look, I'd add on to Jill and Tony's point. We're helping build the process, so we're all guinea pigs. We're all experiencing it first. So, you know, Jill's been through it, Tony and one other recipient are through the process. We're about to finish the entire process, and it's taken months. Tony's right, finding an auditor that can actually take on the work is a challenge. I think the other point to make is we're all getting accredited and under restricted levels. So I think that's one of the open conversations regarding, is that sustainable as we expand CDR and for fintechs to participate? It's a pretty heavy lift, even for a large company like ourselves. And as everyone said, we've had to write policies, complaint management policies, things that we may have had, but they didn't comply with CDR. And my main point was going to be, we have SOC 2 standards, so we get that accepted by any bank around the world, yet it's not acceptable to the ACCC for accreditation. Again, like everyone else, it's an additional cost and time. So I think as the process matures, there will need to be some consideration regarding the existing frameworks that companies like ourselves are participating have in place and what's acceptable. Otherwise, I think the barrier to entry will remain extremely high, which is obviously not the intent of CDR. We want all consumers and businesses to benefit. But look, I think it's hard to judge our experience versus is what Jill said. It actually will be streamlined and easier, but I do think with the audit for ASAE 3150, we do need to find a more efficient and cost-effective way for participants to join. Otherwise, I think it's fair to say that that's a big barrier to entry for most fintechs.
I think the other one too, Steve, the other big cost that we haven't mentioned that because of your size, you didn't get, and because Brian's size in being a bank, they don't get, but a fintech will get, was our insurance increased by 300%. You know, just to get insurance was it was horrible trying to find the right insurance coverage. It's not one insurance policy you need about 3 different parts. So that really took us by surprise, that extra cost as well.
Yeah, I think it's interesting, both those comments, especially Steve, when you're talking about SOC there as well, because that's something we certainly been pushing more broadly as obviously a cloud service provider in relation to accreditation and standards that are actually kind of internationally consistent and having a much more consistent approach, or even if it's an APRA regulatory standard, which I do feel like the ACCC has kind of found quite challenging. So I wonder as well, to an extent, you know, obviously this framework now sits with the ACCC, but I don't know if they're the medium long-term regulator of it in the broader scheme of things. I think they are struggling a little bit with actually being the regulatory body for it. But before I go off on a tangent on that, Brian, back to you. Tell us what was the challenge that made you go, no, I'm pushing pause on this one for now?
Well, look, we're a bank, as Tony alluded to, and we qualify for what's known as the streamlined accreditation, because basically to be a bank, you've got to put all of those security controls and procedures in place just to maintain your banking license, and there is absolutely no value duplicating that process. So we went on the journey, but we found that the rules weren't particularly well developed. And in our case, the rules weren't developed about the corporate structure that we operate the bank under. So we have a holding company and we have two companies underneath it, 100% owned by the holding company. One of them is the bank and one of them is a technology company that provides the services to the bank. That's quite a normal sort of arrangement. Most banks in Australia don't actually manage their own technology. They outsource it to somebody. And in our case, we were outsourcing it to our sister company. But that didn't quite fit with the rules as they'd been drafted. And we had to get an exemption as such to say that, you know, the rules really didn't cover our structure, and I know there's work going on now to create more opportunities for third parties to assist banks and other parties as intermediaries of some sort. So that was a bit of a surprise to us. And, you know, generally the rules as they were released on day one were full of missing use cases. And I think we've all seen that, you know, in the journey. And they will need to be developed further to get a really functional environment.
I think that's a really good segue into user cases and what you guys are seeing, obviously, from your different businesses, but also in that marketplace. So I just want to make sure that everyone who's attending knows that it's not all bad. It's actually, there's some real upside here as well, short, medium and long term. So Tony, you're blinking profusely. So I'm sure that you have a couple of excellent user cases that you can enlighten the rest of the group of.
Okay, thanks, Jessica. I'm not going to blink anymore then. Yeah, look, the three simple things that I can think of actually, without use case, as I said before, we instead of screen scraping, you know, we get the consent, obtain the consent from the customer, send that over to the bank in order for them to authorize. You know, we get back the tokens that we need to then go access the data. So no need for credentials, so that's great. So it's quite safe there. You know, there's a lot of technicalities around keeping that safe, so that's a good thing. And it does work. When it works well. But once we have that, we're able to pretty much get the data straight away. So, you know, you could be tapping your, you know, your credit card at the coffee shop, and then you open up our app, and you will actually see that transaction there. It's that fast. So there are a lot of, I'm not going to go into the nuances, let's say, of, you know, transactions that are pending versus posted, or differences between, you know, and there are differences between, you know, different products at different banks, between the banks themselves. So this is not it's not a one thing. It's not like a one size. You have to actually, when you're a data recipient, you need to understand all the differences. You need to work with them, with those differences, in order to, you know, not have that come back into your customer experience. But it is great in terms of the data speed, the speed at which that you get the data. And, you know, today we're not, you know, we weren't aware, and Brian was right, you know, when he, at the stage when he was looking at the use cases and what data was there. I mean, in the test environments, it's all synthetic data. It's all manufactured data. It's not realistic. It doesn't really tell you what you're going to get. It's not until you get in production that you actually see the data. And, you know, so when we've built an AI engine and a categorization engine, we think it's probably pretty damn good, as we've looked at what we get through our screen scraping partners and things and then compared it. It is, we know it's better. We know it's more Australianized, more accurate. But, you know, you can only do that on top of the data you get. And if the data is different, and if it's different by product or it's different by bank, then again, you have to start catering for that. So this is not just a technical standard per se. You know, in open banking, you know, some data is optional. Well, if it's optional, it means different banks can do different things. And it's even optional within different products within the same bank. So you have both of those dimensions to be dealing with. But in the end, it does give our customers on our, like it's a, okay, we can call it a personal finance management app. It does budgeting, it does goals, it does challenges, it provides insights, it provides, you know, equivalents of people like you. It can say like, you know, you know, you're saving this much money, people like you save X amount of money. So it's a lot of features. I don't want to go through the features, but it's all enabled by the data, provided we start seeing, you know, more of the optional data come through, it's going to be even better.
Yeah, and I think that's an interesting point. I'll turn to you, Jill, because obviously, as you just said, Tony, I think different banks will approach this a little bit differently. So I'd be kind of interested to hear some of your insights on how you think that, you know, different banks have approached this as well as in the Big Four, and or if you've seen something there that you would like to mention. But yeah, over to you, Jill, in terms of user cases, because I think everyone's kind of dream is obviously get rid of screen scrapers altogether, and that would be a good outcome. But I don't know if we're close to that or if we're still a little bit further off.
Yep. So the use case for open banking is something that you know, it's what keeps me up at night. I'm just so excited about all the problems that face businesses, consumers, and how open banking can really solve them. So it will, like, I think that it applies well beyond financial services and banking, and well outside just the simple use case of account aggregation. So actually this morning, Adatree, we just released a report about 25 use cases for open banking, how it applies across all industries and across the customer lifecycle as well. So acquisition, retention, and innovation. So we've categorized them into smoother and smarter. So smoother, it's more of a temporary advantage. You get to an outcome faster. That's your back office, that's your customer experience. I think that those will naturally be the first use cases. It's easier to calculate an ROI realistically, and it's easier to implement. So that could be credit assessments, customer onboarding, origination, and account switching. The smarter use cases, that's more data driven, then they're harder to implement, but I think it really leads to sustainable competitive advantages. So that's more capabilities for predictive analytics, personalization of offers and pricing, and data-driven services. Ultimately, like these are like some of the new services that you couldn't deliver like before with screen scraping, or I guess just with the current data that they really have. So we get excited about some of those use cases for open banking, and really thinking about how can this impact an energy company? How can this impact not just fintechs and banks, but if I'm retail or travel, if I'm government, why do I want to be a part of open banking? So we really wanted to just have get that thinking started about, you know, it's not just for banks.
Yeah, I think that's a great point, because obviously we have seen the government kind of flagging that it's going to go into different verticals. So I think one user case is one thing, but once you start thinking about all the different data sets out there, and dare I say even more consumer-centric ones like retail, it could be quite interesting over time, I think. Steve, any observations for you on that one in terms of user cases, or anything to add on those other points?
No, I think as Tony said, we're all migrating out of screen scraping or direct feed. So there's going to be obvious advantage around time and better quality data, but we concur with what Tony said. They're all producing different data. We sort of see that now, but I just think with the scale of information we're going to be ingesting, it's going to get more complex. So I think working through that for us, obviously, we're live in the UK with open banking, and we obviously operate in the US with APIs. So we build all our AI and ML engines off the back of real-time data. So we've just released some capability here off, the data we currently get. So we see some huge advantages around, real-time actionable insights that we're starting to provide to our customers, which then actually help them in their life cycle when they're actually going back to a bank for funding and those type of things, because that aggregated data gives pretty strong insights into credit worthiness, the health and cash flow of a business. So they're the type of, critical use cases for us. The other one obviously is automation. When we're getting real-time data that's reliable, we can actually do the work for our customers. So our product ultimately should actually be self-categorizing and actually providing, reports and information as they need it. So those type of things will through open banking, and obviously, as Tony and Jill said, it's a lot more reliable, easier customer experience. So those are things that we're keen to obviously leverage as well.
Yeah, no, I think that makes a lot of sense. And what you're seeing in the UK as well, because I know that the take up there initially was quite slow, and I don't know if that's kind of government over-egging the sell in the first place, or if it's just actually takes a little bit more time for people to find their feet, as you guys have just outlined now, in terms of understanding the broader process and how you actually integrate into that in a, if not seamless way, at least an effective way. Can you reflect a little bit on that for us, Steve, in the context of what you're seeing? Do you think that the uptake in the UK, well, has it been fast, slow? Is it tapering out, or is it actually increasing now over time? Is that something that you have visibility on?
Yeah, I think in the first year it was probably a rocky experience over there for everyone involved, and it sort of started and paused for a period of time. I think once everyone got on board, we've seen fairly healthy take up. I suppose we've got a really easy comparison. We've got existing data, and we're comparing the migration effect of customers. So over the last few months, we're now connected, I think, to pretty much all banks in the UK, and we're seeing a good take up rate. But again, as you know, it's a customer selection. The customer has to take action. I think what's driving that now, more than say 6-12 months ago, the banks and companies like ours are working together to encourage customers. And then you've also got the market, such as accountants, advisors, and other parties actually encouraging participation. So I think we've seen a spike in the last sort of 3 to 6 months. Has it plateaued? Probably a little bit. And again, it's just about education and communication. And I think we've seen the same in Australia in research over the last sort of several months through the bank and other potential participants, that the education is critical, and that's something we have to work on with the banks and the ACCC to make sure that the consumer and businesses understand why to get involved. But yeah, that's not a surprise that if you're outside the process you wouldn't really understand it. But yeah, we're seeing good take up in the UK, but I think there's still a way to go.
Yeah, I want to come back to on that point that you just touched on there, which is that kind of broader education, not just from the ACCC, but from us as an industry as well with consumer. But before I do, I just want to unpick Brian a little bit here. When are you jumping back in, Brian? What's going to take? How are you going to heat this up for us?
Look, the real challenge with our use cases, which is to around the customer and give them a view of all their finances, is that there's currently only four data holders, the big four, that are contributing their data, and then only some of their data, and only for some of their customer types. So for us, our challenge has been, how do we migrate our existing service to use CDR, which, yes, it's more secure, it's faster, but it's got some real restrictions to it. So you can only see your deposit accounts and your loan accounts, okay? Well, where's your mortgages? You can't see those. Where's your joint accounts? You can't see those always. Well, yeah, and when you go to those big four and you try to register your accounts, they'll only show you what they want to show you. So you may not know, you may not get a complete picture of your finances. So for us, the challenge is, how do we coexist with screen scraping and the CDR? And when will all of the ADIs in Australia, and there's about 140 of them, have all of their products available via CDR. Now, the timetables that have been talked about at present suggest that's not going to occur for several years. So, you know, we're going to be in this dual environment for quite some time. And I think that only towards the end of it will the real use cases materialize, because then you will be able to collect data from all of the data sources that you need to fulfill the customer's particular use. You know, responsible lending is a focus that a lot of us are looking at. And to do that, we need to have a complete picture of your finances. But if you're only can see what you may hold in the big four banks, and you only see a subset of the accounts, then it really isn't a solution for responsible lending. And the same for the use cases that Tony is talking about. His product is not viable if it's only going to access the big four banks. His product relies on people being able to connect all of their banks. And that's really the challenge that we have to work through as an industry over the next 3 to 4 years to get real value out of CDR.
And this is, I guess, Brian, why you know, screen scraping will sit alongside CDR for a period. So, you know, we do aggregation. It's called aggregation, but it's one of the things that's been driving the UK. In the last 2 months, I think the ABIE reported a 10-fold increase in, you know, in data being used from CDR. But, you know, the example, really, the simple example is if we have a customer with CBA today and one with ING, well, ING is not on CDR, so we have to use screen scraping for ING and use, you know, CDR for CBA. So, but we do that, so at least the customer can still aggregate their bank accounts across different banks, but you're up for using different technologies to be able to do that. It's not one technology, and that'll remain for a period of time. But aggregation, you know, people do have different bank accounts, term deposits with different banks than their transaction account, and so it's needed.
Yeah, and I think that's an interesting point, right? Because there might just be that there is a bit of a hybrid happening short, medium term, but then actually pushing some of the big banks into a more holistic way of approaching this, which I think is what we'd all want, because I think that's where you can drive the real kind of customer outcomes over time. I want to come back to Steve's point around customer education. And I guess there's kind of two parts to this, right? We kind of sit on the one hand as an industry, seeing the absolute value of data and the free flow of data or easier access to data that can actually help inform a better customer experience. But the framework is pretty complex, and everyday people don't really, I don't think, understand CDR as a concept, but they do understand a good user experience. So my question, and I'll start with you, Jill, what do you think will drive consumer take-up over time? Is it a superior product? Is it government education? Is it ACCC education? Is it industry education? Or is it simply going to be that aha feeling when they open something that just works, for a better way of putting it?
Yeah, so great question. I think that it really just comes down to, does it solve the problem? Is this a better experience for them? Just thinking about, like, do people need to understand it, or does it really just work? Do you understand how PayWave works? Do you know how bank licensing works? Do I have any clue what happens when I go to acupuncture? No, and I don't need to, and it just works. Like, I go there for an outcome. I go there for a problem to be solved. And I think that once there's a few data recipients, they don't have to have a killer use case. It just needs to be a better experience for consumers. If there's operational efficiencies internally, that's really great, but it has to have, like, the customer at the heart of it and better experience. So either, like, making something smoother or giving them more insights, making it smarter. So I think that it'll just happen along the way. Remember, like, the first time you use PayWave, you'll be like, man, I don't have to put a PIN, or I don't have to sign. But, like, you just don't really think about it. We're like, well, that's easy. And liability is not with me. I'm sure that there's some licensing and agreements, it happens, and this is great for me. And we've never looked back. I think open banking is going to be the same.
Yeah, I think that's a really valuable reflection there. Steve, you were talking there about how you've been talking to the ACCC more broadly around and a more concerted educational approach. Do you want to talk to us a little bit about that? Because I feel, personally, I feel that's the part that's been missing. They've been kind of wanting to oversell it, but then being really cautious around overselling it because we're in this kind of interim early stages where it's not quite streamlined enough to articulate the consumer benefits.
Yeah, I think it's fair to say that's a work in progress. You probably, to your point, you haven't seen much because I think the clear direction of how the collective industry is going to be talking about that is still sort of being worked through. I think to Jill's point, it's going to be heavy on us for our own customers around the experience and the benefits, like why. And we have that now, like today, why would you connect your bank to our products and services? So we're sort of already having that interaction, but now this will bring enhanced benefit or features to our customers. So it's really, I think, upon us to do that as we're interacting with our customers, and obviously also with the banks. You know, it is the customer's data. So, you know, what is the value of actually sharing your information with others? And then, you know, thirdly, what is the role of the ACCC or the broader government on what are the key fundamentals of CDR? Like, why was this first put in place and what is the benefit it's trying to derive for business and consumers? And making sure that message is really consistent. And I think we all know what that is, but we need to make sure that the message is coherent. And then when we get to interact with those customers, we then add the value of, you know, if you do this, this is the benefit that our product or service will provide to you, and making sure it's consistent with the whole premise of CDR. But I think more broadly, there's no clear communication strategy just yet as an industry. And that's something that the ACCC obviously and others are well aware of and working towards.
Yeah, no, I think that's fair, and I think it's fair to say that COVID-19 has kind of also just, you know, shifted everything a little bit in terms of the ACCC priority or broader government priorities. So it's certainly not helping in terms of setting that pace either. I'm just going to turn quickly to a question from Alistair, who's one of our attendees. Question is, hi all, how does a move towards right access under CDR impact your respective businesses? I'll start with you, Tony, if that's okay. Yep.
Yeah, it's great. I mean, we're really, really looking forward to it. Obviously, Scott Farrell's looking at that at the moment. We don't have a timeline of, you know, what he comes back with, or there probably is a timeline for the consultation to finish, but, you know, then it has to be done. That's what's driven a lot of the UK experience as well, is right access. You know, once things can be integrated into the payment networks and into those rails, then particularly if it's around payments, I mean, right access won't only be open an account, it will be, you know, transacting, let's say. And so there can be many use cases for that. That's quite exciting. I think that's what will really, really kick things along once that's done. You know, you could almost liken it to autonomous driving. So say today, you know, you're not going to drive a car and take your hands off the steering wheel, but you don't mind it, you know, warning you about lane changes, doing the kind of speed thing in front, putting the brakes on you, but you're not going to let go of the steering wheel. But in the future, what could happen once right access comes in, you know, our app could even automate the moving of your deposits from one bank to another to get a higher interest rate. As I said, it's going to be a long time before that.
Or a lower interest rate, maybe, even.
Or whatever the case may be. But what we're saying is, you know, we can automate the change so that it benefits the customer, even if it's a matter of moving accounts around. We're a long way off that, because that's more an autonomous driving kind of thing. Then I will show you what the differences are. Even today, like one of our use cases is because we have product reference data, we have for our data holders not only to comply with product reference data, but they could actually see all the different products and fees across all the different banks, and we could compare them for them, and we can give them those insights and say, look, one example might be today, just on the data side, it's not the right access, where, you know, you have one of these savings account that gives you a bonus saving account, but we already know that, you know, only say 35% of people achieve the maximum bonus, because they don't make their fifth deposit or their fifth transaction. And so we can give them insights that, you know, 3 days before and say, well, you're not achieving that. Or in the right access case, if it once that term expires, we could redo that or redo that with a different bank. So I think right access is really exciting, but I'm looking forward to the day when that comes.
Well, before I move on to the next attendee question, I just have to ask Brian quickly, if you had right access, are you back in? Are you dealing yourself in then?
Right access is a whole new box of worms, and I don't expect it to materialise anytime soon. There are enormous amounts of changes that have to occur back in the core banking system, so I'm looking at it both from a data holder or a bank and also as a data recipient. It's not an insignificant task. A lot of core banking systems don't actually support delegated access in the way that it would have to be provided. So it's a huge build, and I think it'll take a significant amount of time to see that come into this jurisdiction.
Well, we'll live in hope. Everything comes to the one who waits. Okay, Brian. So I'm going to move on to one of the questions from Darren, who's one of our attendees as well, who is interested to understand how does the movement of CDR into other industries impact your respective businesses. So I might turn first to Jill and then to Steve, and then move on to another attendee question.
Absolutely. So I guess, how does it impact Adatree? Adatree is industry agnostic, both for data holders and data recipients. So ultimately, it's more reasons to be part of the open banking ecosystem. So that's great for us. When right access is introduced, we're definitely going to have as many solutions as a third party for companies to be able to both initiate payments. I guess, like to Brian's point, cores can't really take that, but it's also a question of is it initiating payments? Is it like timelines to receiving payments? But what are the non-payment use cases for right access as well, which we talk about in the use case report. And some of it's like really important ones, like customer information updates as well, or if you can open or close an account on behalf of a customer. So I think that overall is more industries are data holders. It's great for anyone who has done the hard yards, got accredited, and you can start to realize or get more data sooner rather than later.
Yeah, no, that makes a lot of sense. And Steve, from your end, would you concur with that, or would it impact the business?
Yeah, I concur. It gives us greater opportunity how we can support our customers, in their daily life, and businesses to just point around payments. I think for us, those in the UK, there's a payment layer involved in open banking. We'd like to see those type of things expanded here for our customers, given their businesses trying to get paid and run their cash flow. So those type of capabilities would be quite interesting to us. But I think, as Brian said, it's another can of worms and another large piece of work for all of us to think about. But when it's available, I'm sure it's something that we've already thought about would be of value to us and our customers.
We got one question from David, who wanted to understand, when do participants anticipate a tipping point? When do participants anticipate a tipping point is for uptake of open banking by data recipients? When more companies use open banking than screen scraping? So I think the question is, when do we see that as a concerted push? I'll start with you, Brian.
I'd expect that we're not going to see that tipping point until somewhere inside of 2022, mid-22 would be the best guess. That's when the majors should have all of their products available, and the remaining ADIs should be well on the way to CDR enabling their infrastructure. But I don't think you'll see it much before that.
2022. All right, Tony, what's your best guess? We should be taking bets here, shouldn't we? I shouldn't be running a tally.
Look, I'm going to agree with Brian, but what I would add, and I think it was back to the original point when you asked, what would help the uptake. So I think the ACCC know, and we all know that it's going to be a few years before that tipping point comes, or before that, that it gets to a point where people come on freely. But the strategies for getting there, one is education, and we all know that it's been a bit slow in that. I think they've needed something to sell, so perhaps that's the reason why the government's been a bit slow on that path. But the other path is, it's a little bit like, businesses acquiring customers. Customer acquisition doesn't come only organically, but it comes with putting more people on. So in this instance, I think the ACCC strategy is, whether it's going to be through intermediaries, whether it's getting, all of the banks, faster on, whether it's, it's trying to push the ecosystem in a way where more participants are on for them, as Steve said, to do that education, to gather more customers. It's not just going to be organically. That's got to come because the ACCC will try and make sure that more people are getting on by allowing more access through whatever that means is.
Okay, so we've got another 2022. Jill, give us something a bit more optimistic than this.
I'm not going to be more optimistic than that, sorry. Realistically, it's going to be a push and a pull. It's like you're going to be pulled into open banking just because the tipping point is going to be when the data that you can get is greater than the data that you can get for open banking. The data sets, especially once you look at things like direct debits, closed accounts, when the data schemas really open up for data clusters, really, and the push of it is once screen scraping isn't an option. Look at JP Morgan in the US. Look at screen scraping in the UK. When talking to a big data recipient in the UK, where we were asking them, we're like, oh, why do you want to be a data recipient? They're like, because we couldn't do screen scraping anymore. So it's both a push and a pull. But I think that it's the introduction of right access and introduction of more types of data sets and more details. That's the most important part.
Yeah. Steve, 2024?
I'm more in Tony's camp. I think 2 years to Brian's is probably, and yeah, I would have said 2 3 years. It's really about how easy the ACCC can provide access to intermediaries and broaden the participation in the shortest amount of time. I think as it currently stands, we're a couple of years away from the current timeframes with all the banks getting access. When we think about bringing intermediaries on, bringing the 130 odd banks that Brian touched on, that's going to take some time. And we also need to make sure, to Jill's point, we're actually getting the data better than what we currently get and a broader data set. So I just think it's going to take time, but also just removing some of the barriers to entry and allowing more participation than how it's currently structured will speed that up. But yeah, I think 2 years would be the best case that we'll currently see. And that's really based on the timeframes of the program, not so much a lack of wanting to get involved, but I do think the only way to speed that up is to make sure that more people can participate.
Makes a lot of sense. All right, guys, we've got 4 minutes to go until we're hot on 3 o'clock. So I just wanted to finish with a bit of a big, bold prediction question for you all. And I guess we're all optimists and futurists to an extent. So my last question, and I'll give you all about a minute and then before we wrap, is just to give us a big, bold prediction of what open banking or the broader CDR framework will bring. What do you think is like a really out there idea that no one has really thought about until now, but the serendipity of actually having the system up and running will bring about? And I'll start with Steve. Actually, I'll go back to you, Steve.
Yeah, I don't know how bold this will be, but I think in the context of having real-time data and a lot more information available when we think of consumers and businesses, and particularly in banking, and obviously over time we'll be able to bring some other data sets in to complement that. I just think the whole premise of CDR, where we can actually provide solutions to customers in real time or near real time, which doesn't exist today, particularly in banking. And we think about the current environment, and you have to read the media today around lack of SMEs getting access to the government guaranteed loan schemes for whatever reason. Trying to be part of where we can actually solve that and actually improve the sustainability of small businesses, consumers' financial well-being, and get them access to the best solution in as quick as time as possible. To me, that is a game changer, because now it takes days, weeks, months. There's lots of barriers to the user experience. I think over time, if we all collaborate and work closely, we can support consumers and small business get access to the right information, insights, and solutions. That's where we see the true value. And I think for all of us that, those type of things is why we want to participate.
Great. Tony, over to you. 45 seconds. Prediction.
Change in behaviour. I think the whole goal of CDR is actually more like, instead of the B2C, but not more like the Me2C, it's about consumers having control of their data. That's the purpose as it winds out. Once you can imagine a point when it gets through banking, through telco, through energy, and maybe health, that the only thing left is social. So we could end up in a place where consumers really do control and manage who sees their data and how it's used. And that would be, a change the way the world works.
Excellent. Brian, 45 seconds, and then we're going to finish on Jill.
Look, I think that banking of the future is going to be fundamentally different to what it is today. You will be able to separate your product choices from your experience that you use to drive those choices or manage your money. And CDR will go a long way to enabling that in a way that you feel secure. So that will actually change the way the banks think about their customers. Some will develop very, very attractive products because they will need to compete to a much greater extent than what they're doing today. There's no such thing as your MFI, your main financial institution, anymore.
Great. And Jill, bring it home for us. What's your big bold prediction on this?
All right. I'm positive and negative on this. I think that this is going to create unicorns, and it's definitely going to be the downfall of some. If organizations are wondering if they should be a part of it, their competitors are already planning how they're going to acquire all their customers about it. I think that open banking is going to be the death of backbook pricing. It's going to be the death of paper forms. And I hope that it's the death of barbecue talk about how you hate your bank, because with open banking, you can do something about it.
I think that's an excellent note to finish this on, because I think that's really what it's all about, is about bringing the power back to the consumer. So I think everyone on the panel today has really outlined that for us. I hope the attendees have enjoyed the conversation as much as I have. It will, just a quick thank you to Fintech Australia, who have facilitated this. And this has been recorded, so it'll be on their website a little bit later in the week if you want to share it with your mates. All right, on that note, thank you very much to Tony, Steve, Brian, and Jill for being such great panelists. And thank you to Fintech Australia, and we'll speak to you all soon. Thanks.
Thanks, Jessica.
Thank you.
Bye. See you guys.